fourth line of the quote, right, is, and then you win. Well, the good news is we've already won. So yes, they're going to fight us, but we've already won. Those of us who have embraced the digital future and crypto, we've already won. It doesn't mean that we can't recover. We will recover. This recession will end and we'll get back to recovery, but I see no signs of any sort of economic policy that is stimulative, right? Putting more IRS agents to audit more people is not going to make them start more businesses and spend more money. Increasing taxes on people that make less than $400,000 is not going to encourage them to take out a home equity line and start a business and increase employment. So look, I'm not calling for the end of the world, and I'm not saying we're in a depression. I'm saying the risks are there. The policy moves that are being made seem like policy mistakes to me. Raising interest rates and restricting liquidity into a slowing economy has never been a good idea historically. Yeah. Raising taxes is, on the people that create the jobs has never been a good idea. Taxing income and innovation and wealth creation, never been a good idea. I've never understood this whole phenomenon of it's okay to just print money out of thin air, right? The Fed created $2 trillion during COVID lockdown, okay? Put us in a budget deficit of almost $2 trillion.
Yeah.
No, reason to balance the budget. And then all of a sudden you're like, well, now we need to balance the budget, so let's go tax people's income. Like, no, what you should do is encourage people to make as much income as possible, to create as many capital gains as possible. Capital gains should be tax-free, and you should tax consumption, right? It's fair, it's equitable. If you don't want to get taxed, you don't consume. You can't cheat, right? If I buy a shirt, I pay tax. I go out to a restaurant, I pay tax. Yeah. Right. But at the end of the day, income and wealth creation is the backbone of capitalist society. And my fear is we've been shifting toward cronyism away from true capitalism and the power of the masses and the power of innovation. And, I guess the one good thing of all of this is by actually allowing a recession for the first time in 14 years, what it will do, it'll shut down the weak companies.
Yeah.
And I do feel for any family who's impacted by that, right? But what'll happen is the innovators will start new businesses. And the people will retrain, and we'll get the formation of some of the great companies of the future. So I am actually really positive on the future because I know that these periods of winter lead to spring and summer.
Yeah.
I find so few people actually spend time thinking about the answer because the answer is really important. If you look at the history of Bitcoin and digital assets, they are uncorrelated with traditional assets. 0.1 correlated to stocks, 0.0 correlated to bonds. Why is that? Well, because stocks and bonds are all driven by the same things: GDP growth, interest rate policy, inflation. Those things have nothing to do with crypto.
With cryptocurrency.
No, Mark, they have everything to do with crypto. No, they have nothing to do with crypto. Crypto is driven by the technology itself, adoption, growth of the network, regulation, and changes in the technology. Nothing to do with those other things. But people say, but it's been highly correlated to devaluation of the currency. No. One Bitcoin still worth one Bitcoin. One ETH still worth one ETH. What you're doing is you're pricing it in a devaluing currency. In November, we had the greatest leverage in the system in history. In the financial markets, traditional financial markets, highest margin debt ever, and also the highest leverage in the crypto, because there are people doing stupid stuff, levering up their crypto 50, 100x at some of these crazy places around the world. And you had hedge funds like, Three Arrows Capital levering, $3 billion into $18 billion. So massive leverage. You had Elon borrowing money to buy Bitcoin, massive leverage. So what happens when leverage goes down?
Sure.
Liquidations. Well, a liquidation, why do you get a margin call? You bought an asset, Peloton. Peloton goes down 90%.
Yeah.
And you bought it on margin, you got to pay the margin back. You can't sell Peloton to pay back the margin. So what do? You sell bonds,
other assets.
You sell cash, you sell gold, you sell Bitcoin. So what happens is in liquidations, in periods of time where markets fall, not because fundamentals are getting worse, but because the leverage is being forced to be liquidated and you're selling assets to cover those margin calls. And the same thing is happening now. Is the reason Bitcoin has rallied much more than stocks since the middle of June is because it didn't care anymore. It got fully delevered. We still have the second highest leverage in the history of traditional financial markets in the equity markets. So I think that still has the chance to delever, and that would put pressure on stocks in the fall. Crypto, we don't have that. So it will now do what it does, which is TikTok next block, more people adopting it, more wallets, more transactions, more network value. The value of Bitcoin, right, follows Metcalfe's law, a perfect parabolic curve. Fair value today, 32, 33K, whatever the number is. We're below fair value. Now, we'll get back to fair value. And then unfortunately, in the next, crypto summer, we'll go above fair value. Sure. And then we'll crash back below fair value. That's just the nature of greed and fear. Stocks should go up, right? Companies grow, they pay dividends, the economy grows. Stocks should go up about 6% a year in real terms. But that's not what happens. Price is not value. Price goes way above when people are greedy and way below when people are fearful. And so we're at a period now where we are, again, only 7% of the time in history have we been more above fair value. We need a 53% drop from here to get back to fair value. And I'm not saying we're going to fair value tomorrow, but the point is we're super expensive, and it's better to own things, I believe, that are below fair value. So Bitcoin at 24,000 is below a 33,000 fair value. I'd rather buy that alpha, built-in alpha, rather than try to hope that we stay above fair value in equities. Yeah. This is simply an evolution of technology, right? I mean, this is tech path. This is the tech path. In fact, if I think about 54 was the mainframe, 68 was the microchip, 82 was a personal computer, 96 was the internet, 2010 was the mobile net, and 2024, which is still coming, is the truth net. And the truth net is blockchain. Blockchain replaces trust with truth. We don't have to trust intermediaries and the banks have figured this out. We will have truth on blockchain, and this evolution of technology, right? It's unfathomable, as you say, that Visa, which is money to most of us, right? Now it still sits on top of FedWire and ACH, which to your point are decades old, horrible technology. You go back to the golden age of America and American politics in the late 60s and early 70s. And what did you have? You had a bunch of 35 to 40-year-olds basically saying there's this actually, you had John F. Kennedy getting elected. You had, Joe Biden. There's this a video of Joe Biden at 35 years old saying, "You must pass the torch, you octogenarians," and they were probably only septuagenarians then, but you need to pass the torch. So that's 35-year-olds. Now he's an 80 and he doesn't want to give up the torch. So look, we're run by octogenarians, and nothing against, I hope to be one someday. And they're beautiful people, but the reality is leadership and greatness and creativity, look at history, it's young people. And what we need is that next shift in leadership, and it's coming, right? But it'll take another cycle. If you look at all tech innovation, it's all young people. So young people don't know what they don't know, and they're creative and they're innovative and they're great leaders, and that's what we need. So we need the inspired, impassioned young people to take some positions of power. And tired old dinosaurs, and I'd say it to her face, like Liz, just need to retire. They need to go away. First, they ignore you. It's a bunch of nerds and geeks with their funny magic internet money, whatever. Then they laugh at you. So 2016 to 21, oh God, look at those nerds and geeks with their magic internet money, so stupid. Then they fight you. So 2022 to 2027, they're gonna fight. And the incumbents are gonna fight really hard because what's at stake, Paul, is $7 trillion. The banking cabal skims, and I use that term intentionally, $7 trillion a year from all of us for the privilege of using our money. Fourth line of the quote, right, is, and then you win. Well, the good news is we've already won. So yes, they're going to fight us, but we've already won. Those of us who have embraced the digital future and crypto, we've already won. Look, I'm as hopeful as I've ever been. I know lots of good young leaders who want to take a role. The innovation wave in crypto, the young people, myself excluded because I'm an old guy, but the people I work with day to day are young, talented, vibrant, passionate, incredibly focused on building a better world. And that's inspiring. And that